We are check. I think we are good. Morning, Steven. Morning, people, everybody. Yo, options trading. What's going on? Oops. Wrong thing. Sorry, playing with some trades this morning. Hope you guys had a good one. Nice little push out of the gate. I think that was somewhat expected. We'll see. I think we're good. Audio check. You guys hear me all right? Looks like we are probably okay. Anyway, so welcome. If you guys are new, if you don't typically watch this stream, basically every Monday we kind of come in and take a look at the markets, take a look at really what happened last week and maybe over the weekend, and kind of plan out the rest of our week. Monday mornings, a little hot and heavy for some people, so I don't really, I don't like to do my planning on the actual weekend just because every time I plan out a trade on Sunday or Saturday, it's like Monday comes around and everything's already hit my target, so I'm like, okay, back to the beginning anyways. So that's kind of my shtick. So that said, we kind of approach this like a business. So if you're in a company or doing anything for a living, and we do trade for a living, it is a business. And so every Monday, if in your W-2 jobs or what have you, you probably have a Monday morning meeting, and this is ours. And that's pretty much it. I believe we got a couple, I think my buddies were online. And so just gonna hop into this really quick. So if you're new to this, we are an options trading group. So before you start trading options, be sure you call 1-888-OPTIONS and get a copy of Characteristics and Risks of Standardized Options before you start trading. It is important to understand the derivative that you are using. So that said, also should point out that you should carefully consider whether trading is suitable for you, considering your circumstances, knowledge, and financial resources. So a lot of stuff last week. Steven, can you speak? You looks like you're muted. Let me see. Most of the stuff that I grabbed was really, was really from like Powell's week. I'm getting some echo. Audio technicalities. All good. And kind of just digesting that speech, right? So for the most part, and we'll look at the charts, it was a pretty, we got a 75 basis point hike, and we got a speech, and there was a lot of information in there. At the end of the day, it really wasn't anything new, and I think what's important, if you're confused as to why the market's rallying right now, the biggest thing is that the market hates uncertainty. So it was a huge week last week, no question, in terms of economic data, but it was also a huge week in terms of earnings. And this week is actually, from an earnings perspective, earnings palooza for sure. We had, I don't remember. It was almost 1,000 companies reporting earnings last week. You guys, we have over 1,500 companies reporting earnings this week. So this is the heat of earnings season. This week, in terms of economic data, there's really not a whole lot. But just to recap where we are in terms of the fundamental situation and what what Powell is saying and the inflation front really is that the goal is, he's saying, price stability and full employment. I think as we move forward, there are certain things that have not been moving markets, like unemployment rates. I believe that that's definitely going to become a thing. So if you're familiar with any of the graphs or the trends, unemployment rates are actually climbing, and they're pre-pandemic levels for sure. But I think what we're going to start to hear down the road is really about the white collar jobs and those kind of credit situations and unemployment in that sector, if you will. It's not a huge deal, like if the lower end workers, well, I mean, it is, sorry for the Democrats, but it's going to be more impactful for sure if we start to see middle class white collar jobs being lost, which we are hearing about, and anyone who had loans at that level, that'll start to default. And that's what a lot of people are listening to. So Powell says he's going to be data dependent. He's totally said that before. He definitely mentioned a lot about what's called the headline inflation number, whereas previously it's always been core inflation. So core inflation, if you guys don't know, that was stripping out food, gas, energy, that kind of stuff, the stuff that we spend most of our money on. Well, it's definitely shifted, at least after that last speech. So here's the forecast. And what's funny about what he said is that he says, I can't really forecast it. Like, it's hard to forecast 6 to 12 months out in terms of what is our target inflation rate. But at the same time, he also said it's 3 to 3.5% by the end of the year. So when you do the math backwards, we have 3 meetings left. So we have September, November, and December. And this is what's important. 3 meetings left to get to 3 to 3.5% inflation. Let's see. CBOE, and I'm going to go to my trusty CBOE FedWatch tool. I believe we're at 2. What are we at right now, Steven? Do you know? Anybody know? 2.5%? Yeah. So within the next 3 meetings, and this is and it's just the CBOE group, it's the countdown watch tool. Fed is currently pricing, or the market, sorry, is pricing in, looks like another 75 basis points or less, actually. So that's more or less where we're going to be. So if we want to get to 3.5, we're sitting at, what are we sitting at right now? Economic calendar. We are, anyways, it's, the short of the long is that we're looking at 75 or less basis points per FOMC meeting based on this. Yeah, we're sitting at 2.5. Is that right? We're 2.5 now? No, 1.7. Yeah, we're 2.5. So 50 basis points, give or take, 50 to 75 basis points per meeting throughout the end of the year. That's what we're targeting. That's a pretty clear goal. There's a lot of stuff that he didn't talk about, things like the balance sheet reduction, etc. But all in all, it was mostly like, here's my plan to get to neutral, and the market believed him, and the rally ensued. So the thing to think about here is that as you look at the economic numbers or the data, a recession is defined. Yeah. Right, yeah. A recession is historically defined as 2 negative GDP forecasts in a row. And I think that's what's funny in this situation. What defines, I'm sure I could type this, what defines a recession? And as far as I've ever known, it's been 2 negative GDP prints. Generally defined. Yeah. It's a quick Google search, right? A period, temporary economic, that's the definition of, like, this is the definition. Okay, per Google, give it, maybe that's wrong, who knows. 2 successive quarters of negative GDP. And what do we get? We actually got exactly that. So here's where it gets a little wonky, is like, well, okay, so now Powell or the White House is redefining what recession actually means, and saying it's because why? Because we have a strong job labor market. So if they're saying it's not really a recession right now because of a strong labor market, that is why, in my opinion, unemployment and non-farm payrolls, which really have not had a huge impact on the market, are really going to come back into the fold and start having a big impact. So that said, we get those numbers this coming Friday. NVER determines recession. Yeah, exactly. So none of these people actually define what a recession is, and we won't officially be deemed in a recession until another entity, NBER, Nick says, it defines that it is a recession. And the GDP numbers that we just got, they're preliminary first look numbers, so it's really not finalized. So we won't be told, oh, by the way, you're in a recession, until it's already too late. So, I mean, we are in the market that we're in, and that is what it is. In terms of the rest of the economic data, so we did get new home sales that did come in slightly lower, didn't really move the markets. I think everyone's kind of understanding that. And so it's not in here. So Friday we got these personal spending numbers, and this is funny to me. So here's the GDP, right? The market was expecting a positive number. And as we move forward in the slides, when we look at, there's going to be previous and consensus numbers. So the previous number doesn't matter. The only thing that the consensus number is what the market is currently pricing in today being Monday, or whatever day you look at it. That's what the market is pricing in already. So the only thing that will actually move a market is if something's different than what's expected or what the forecast or consensus is. Oddly enough, I mean, this clearly moved the markets, and we will see that. It is what it is. I think it was really, I don't know. It's the definition of what is a recession. So they kind of sidestepped this one the day before. So there you have it. And I think the market will just give this a little bit to digest, really. But what's interesting to me is, okay, so personal spending is going up. Yes, personal income is going up, right, month over month, slightly higher than consensus. Not going to move a market. But for inflation to come down and this interest rate hikes to actually work, well, spending needs to come down. And there's a really hard situation to really digest as a consumer in this environment, is that when we look at these charts, the dollar is worth less. So I need more dollars to get what I used to get. Like, it cost me over $100 to fill a gas tank, like well over $100 to fill my gas tank, my gas tank. And, if consumer spending needs to come down to control inflation, well, I mean, if things cost more, I'm just going to be spending more dollars. So that's kind of the fight that we're stuck in. So it's not going to be a quick one and done. This is not going to be any kind of I heard a handful of people over the last month or so comparing the pandemic lows bouncing up. You guys, that was not a bear market. That was a black swan event. It's not comparable. It's not going to be like that. It's going to be more like a rolling situation. So keep in mind, range-bound trades, shorter time frames for a lot of your things. Take profits when you have them, especially anything over 20%. That's a good profit, right? Take some profits and trade around some core positions. I'm not going to talk about options because that's a little bit more complex. But generally speaking, yeah, I mean, looks like we've got a temporary low in the interim, but we did move quite a bit last week. And so, again, we will take a look at what that looks like from a technical perspective. We have our technical gurus here. Steven is on the line. And before we jump into that, we're just going to finish this really quick. So earnings. So we had 1,000 companies reporting earnings last week. That is massive. This week is the biggest week for earnings. So 1,500. Oops, I didn't edit some of the slide. Over 1,500 companies report this coming week. Let me get my list. It's on my phone. In terms of the Dow 30, last week was most of the big companies. So of the Dow 30, we actually had 21 companies that have already reported. Uh, it's just Cat this week, and I believe it's Amgen. So what is this, something else to note is that last week we had a lot of the large cap companies, they go first. This week, yes, we have more companies reporting earnings, but there are a lot of the smaller cap companies, and a lot of their peers have already reported. So some of those moves may have already been done. You'll see a handful of them do, get hit twice for the same thing, maybe something like their peers did, whatever. But at the same time, one thing to note, as you get further into earnings season, if there's anyone out there trading like the YOLOs or anything like that, the moves actually get consecutively smaller because so many of their peers have actually already reported. So one thing to note, but a big earnings week, on deck for sure. Quick look at the week. So really, this whole week, we don't have anything in our way this whole beginning of the week, actually. So last week, earnings drove the market and were really the catalyst. We'll start looking at those things. And one thing to note, there are a couple, I want to go back one slide. There are a couple companies last week that were a bullish signal to me. So one was Microsoft and two was Boeing. So both Microsoft and Boeing had like double misses, I believe. Microsoft. Steven, do you know if Microsoft was a double miss on earnings and revenue? I believe so, but Boeing for sure. And what's interesting about this?
Unmute yourself in Zoom,
Oh.
so I can mute the YouTube audio.
I am unmuted, sir.
Okay, so it was echoing, and I didn't want to.
Oh yeah.
I believe it was a double miss.
Yeah. So
I have to go back and look at it for sure, but I think it was.
Oh, good. So one thing for sure is that when we have, and I'm going to try and turn down that desktop audio, when we have bad results, bad outcomes, but good price action from an earnings perspective, that's typically a signal that the bottom has been put in. Boeing's already, God, I don't even know. Boeing was way, way, way low. Boeing was, I was sitting at like 112. Here it is today. Look, check out Boeing, over 170. So that is a massive miss. Not as bad as the quarter before. So that's, there you have it. So a double miss, but good price action. Microsoft during the pandemic even was like one of the least affected. Not that it wasn't affected, it really was, but it wasn't nearly as bad as anything else out there. That's what I absolutely remember. And again, a miss, and it rallied. So, those are definitely things to note. Is Google not on here? Same thing, Meta, which was odd to me. Not like I'm a fan of the company or anything, but huge miss. And here we are sitting back towards 170, 165 right now. That's a big deal. I was probably just stopped out of those calls, by the way, if anyone was in those. But yeah, so that's kind of what I'm looking at. If we do see things like that, those are typically situations where it might not be a bad idea to actually, get like a follow-through trade for a day or two. Again, nothing major. And this week, we don't have anything major in our face in terms of economic stuff until Friday. So if there is anything to take away from this, Friday is going to be your biggest day. So think Wednesday, Thursday, super tighten up, right? Like lighten up your positions, things like that, because everybody else is going to be looking at exactly this, especially after what Powell just said, defining recession as at this time it's not a recession because of our labor situation, strong labor market. Well, we'll find out how strong that actually is on Friday. So buckle up. I don't really think it's going to be one of those big moving weeks like we did last week, though. Just not typical. So Monday, really, that's today. Nothing market moving. Everything's coming in at consensus. If there is anything to come in, there might be some services numbers that we want to take a look at as we go forward. Those were obviously the biggest hit during the pandemic. So, and it does have a pretty big weigh on the labor market. Jolts we get on Tuesday. probably not going to be a huge thing. Again, I mean, here's our non-manufacturing PMI. It's really pretty blah this week. And so Thursday, initial jobless claims come in. There you go. So Thursday, we get some numbers. Here's the curve that's actually been moving a little bit. And so if I pull that up, here's just whatever site I'm using for the day for economic data this week. And I believe I sent this last week. But so here's the jobless claims, right? So consensus, previous. If you look at this, here's what it looks like. Here's this curve. So it's kind of bottomed out around 200,000. You were at 250. I mean, they're talking about, we're coming from 450,000. Yes, for sure. Like, look at this, right? But I mean, here we are. It's clearly going up again. So that is definitely one thing that's been on my radar, or at least that I'm thinking about lately. Jobless claims, import, export, probably not going to make a big difference. And then Friday is our biggest day. So historically, NFP, we got this NFP, non-farm payrolls, that typically moves, that typically sets the tone for an entire month, if that makes sense. So I think, and I'm looking at some comparison data here. We'll find out. It just hasn't been moving markets lately, but like I said, I think this is going to be one where we might have a quick reaction Friday, then digest throughout the weekend. Probably not going to be throwing any swings out over the weekend. And then next week, after everyone's had the weekend to digest, we'll see how that goes. It's, earnings coming out, hourly earnings coming out. I mean, this is nowhere close to, I don't think this is even in question. Hourly wages going up, but nowhere close to inflation. So that's pretty much it. We do have one more week of our earnings classes, and that's a wrap. So from here, we can kind of just jump into the markets. And really, I start with a 30-minute chart. Typically, this gives me a pretty good view. I'm going to do one at a time, and I kind of zoom out, right? Before I get into the indices, I did want to point out, so this is the DXY or DXY. And as the dollar was climbing from here all the last month or so, it peaked out right around 109, which was like 20-year highs, something like that. Let me pull this chart way out. I mean, it peaked out quite a bit. And while this chart was going up, that was pretty bad for markets. This started right around May, right? So if we wanted to do something similar, look at this. January, March, May. This is May when it really started to turn around. That's when the Dixie really bottomed out. But it had been making this press, for a little while. Long story short, last week I was thinking as long as we stayed below 107, it's a fairly bullish thing for equities, to be honest, right? And that really just stays true. So we're coming in right around 105 here. I don't want to see, I would like to see this continue down. And if we can get something like this, maybe this, right? That would be ideal for the markets to really, really rally. But that said, we do have to be aware that there is this very, very solid support, 105. But anything below 107, I don't think we're in. I don't see us really. It's good for the markets. But keep that on your radar. This has been, the VIX is very low. We'll take a look at the VIX also. The VIX as an option trader always has to be on your radar. 25 is historically the level where, right here, kind of like your midpoint. Yeah, you can see this pretty well. Right around 25. Anything below 25, it actually is not bad for some swings. And that's exactly the same level that we pushed down off of on the 26th, which I believe is also, the 26th was our, what date was that? Last week. 26 was, yeah, it looks like it was the day before the rate decision. that's right here. So I think that gave us enough of a bullish press to make a pretty big move last week. That said, it's been a pretty big move. When you're down this low on the VIX, that's when it's a little bit easier to start doing some debit spreads, things like that, swinging some single leg contracts for a day, maybe two. But other than that, you're really still looking at things like your neutral strategies at 22, anything under 24 from here. Volatility is actually going to be coming out of the indices, 2450. And, this will probably be range bound for a little while. Something like this, right? So IV will be coming in general. So think calendars probably this week. We haven't done any calendars for a while on some equities, like straight across. I'm actually feeling good about those right now. But are you watching any levels on the VIX, Steven, by chance?
No, I'm just going from like day levels to day levels.
Yeah.
25 was a big one that I was watching that we kind of like shot up to, and then have been on this gradual decline. So now I'm just waiting for like 2120 to break to the downside.
Yeah, I think we got this pop. So over the weekend, just so you know, right, we got this pop in the VIX, and as it's coming back into kind of neutral, you're going to get some of that volatility sucked out of any option contracts that you might be sitting on. And I'm sure that there are many having that situation happen to them right now, which is exactly why I'm not trading also. So that said, I think we had two lines. This was our look last Monday. So this was last Monday right here. We had two things. Do we have 390 outlined? No, I think we were looking down somewhere down here, actually on the lower end, 75. But we actually bounced right off this, just below this double top, and right here at 390. So I'm going to mark this level really quick. This is going to be pretty important, I think, moving forward. And from an economic perspective, I do want to do two things. So we had the rate decision on the 27th. Right here. So that's going to be 75 basis points. And then GDP on the 28th. GDP. Cool. I think those are probably the biggest ones. I didn't look at consumer sentiment on the recap, but it did come in 51 versus, not minimal change. So on these two levels, wow. So this is where we opened Monday. We pulled back just a little bit, tagged this 390 right here, which is going to hit our kind of like support level from May and the resistance June. Before I go any further, Steven, do you have any levels for this week that you're looking at?
To be super granular, I have 407.05. To the upside, I have 417.44, and that's like this little $10 wide range that we were stuck in for a few weeks.
407, you said?
In June.
What was the low end? 407.
407.05.
Oh, you are granular.
I mean, yeah.
Oh, I see what you're looking at. So you're looking at this entire prior consolidation level right here.
Right, yeah, for like all of June.
Right there.
Or not all of June, but like the first.
Yeah, actually this.
Last week of May.
So this was this point of control, this little green dotted line. So this is a volume profile from actually, May to June. And it slapped. That's exactly where we closed on Friday. Look at that. This orange line is exactly where we closed. So I actually don't need this anymore. I can take that down. And I'm just going to move this forward to where we are today. So we're sitting on it exactly one more time as we speak. So from a fundamental perspective, so I'm a technical trader. Most of us are. There are times when I will mix fundamentals, and I know a lot of people like to do that, but it's not in the terms of like mixing fundamentals like an investor. That's what you can't ever do. Is like I don't ever mix investing with trading, but there are times when fundamental events create technical levels, and that's very much what I'm looking at right now. And so this July 75 basis point rate increase right here, this is a clear bullish movement where a lot of buyers stepped in. So that to me is going to be one of those fundamental levels that creates fundamental events that creates a technical level, and that's at 397, and then GDP at the same time right around at 398. Also another series of buyers stepped in. So this box kind of in here sometime down the road, don't know when, for sure would be where I'd be looking to pick off some buying. Wow, actually, if I take, so these orange boxes, this is an average week's range from the open today. I mean that, or even if you just go from the close yesterday, that puts you right into that same box on the downside. And then if we can reclaim that or bounce off this 406, yeah, so I see what Steven's saying. So it's something like this. I just, you know what? What I would do is I'm going to pull this out. And you see we had something very similar, CPI. And then we have these big moves, 1, 2, 3, like this. And then you get this kind of situation just like this. We're kind of static. So what both Steven and I are actually looking at, whether we say it the same way or not, is that situation happens again right there, if that makes sense. So this kind of thing almost like replicated here, here, and likely right in here. So to me, this is a neutral market. And, you know, if you can be quick on it, you know, if you're bouncing in this range, this is tradable for sure. Once we break down that, if we do break below this 406, in that case, then I'm going to be really targeting this 397, but not really before then. That's how I see. What do you think, Sir Steven?
Yeah, no, absolutely.
So this would be 1, 2, 3 days. Actually, funny enough, that's, you know, would take us to Wednesday, Thursday, maybe, give or take. And that's honestly, that's about where the market, if the market's thinking about non-farm payrolls and unemployment, they'll really start to get a little, you know, skittish around Wednesday. So that's what I'll be looking at. I don't see any gaps in here. That's just it's kind of like this fair value area that would need to be filled in right in that, 397 to 399 area. So yeah, I definitely like that. And then probably bounce. So that's my target if I'm going to be trying to pick off longs. For the most part here, I'm not going to be taking any really hardcore upside bets. This is why I'm thinking if we are expecting that kind of situation, right? It's almost flat. The best situation for this trade, calendars, iron butterflies. What's the other one? Calendars, butterflies, and iron butterflies. Two different things, but yeah, a fairly range-bound trade. That is going to be the go-to, and I actually really like that. So I might plan some stuff out on that. There are some other indices, though, that aren't exactly like that. So the Qs, on the other hand, you know, think Tesla, has been like just booming. So in this scenario, the Qs have very much like blown away that entire consolidation level, right? So that was right here. We're kind of in it, but it looks like it's trying to get out of it. On this guy, man, I can do the same thing And if we take, so this would be, it would be right here. So 75 basis point and GDP right there. So if this is an average week's range, see how accurate this is? Like we open here, close on an average week. Man, I don't think, I mean, maybe we just go full, that would probably feel like a fully bearish situation, but something like this, if I bottom out, I got 308 on the Qs with these two levels pretty much coming right in line at the same point for those two events, right around 302, 302.50. Man, if I take 302.50 from here, that would be the top for the week. We'll see. That would be on the low end and, you know, looking for bounces right around 302. Otherwise, I mean, we can't, we have to break and hold. Right now, we're just kind of peaking above this 315. I mean, yeah, a lot of overhead supply too. This big, that situation right there kind of scares me a little bit from going super long. All this right here. Yeah, this is going to be a tough hill to climb for sure on the Qs. So maybe, I mean, I really do think maybe a little bit pulled back. Might see a bounce, but it's going to be a choppy week. That's clear for me. Diamonds, I don't know. This is like your Boeings and stuff. So it's all similar. Look, we're all right in those kind of areas, and I just want to highlight these levels from the 75 basis point hike and GDP on both of them, and kind of tag that fair value area for a downside snipe, if you will. This one's not very far away. Diamonds have been a little bit more stable, actually.
Yeah, absolutely.
I still, I can't believe how like far Boeing has come off the bottom. I mean, yeah, this is what, 10% from the bottom. Boeing is way more than that. So Diamond's like 321. So last week I was leaning more bullish. This week I'm leaning more neutral to non-bullish. IWM, redheaded stepchild of the group, does what it wants. That is true. So IWM's, again, heading right into this consolidation area here and here. So you got to be super careful. But this guy it just does what it wants. I mean, even this, look at this. Even where IWM was during those two events compared to the rest, this thing had already recovered quite a bit. I mean, quite a bit. Right there, 181. So if I want to take a shot, that's like this kind of consolidation level. I think IWM's got the most upside. Probably not going to come down below 191. Upside target looks like 193 plus. Let me zoom this out a little bit. Ooh. These charts get scary right about here. Especially when you pull them back. It's like, wow. Do or die moments.
Mm-hmm.
190 plus. Huge level. Here. That is a toughie. So a little bit more to go on the upside. 191. And then probably cool it off and go into that chop mode over there. Cool. I think TLT. Do you guys want to take a look at any tickers? So Biden, White House today, totally true. Yeah. Okay, cool. I can look at the bonds, things like that I would typically look at. This is kind of going to go hand in hand with what's happening. We got a pretty big bounce off the bottom. I think we just go sideways on this guy for a while. Yeah, this is looking neutral across the board, man, this week. Crude oil is coming off a little bit. I think that's good. So from here, I'm just going to jump into a couple tickers. Let me see. Do you have any off the top of your head that you want to take a look at, Steven? I know everybody's going to want to look at Tesla.
Yeah, I was just going to say that. I'm sure everyone's looking at Tesla above 900 right now. So
yeah, so 910 200-day moving average, just so you know, right? And that's what you just ran into right here. So if you didn't know that, there you have it. Take some profits. Typically, when a stock hits their 200-day moving average, a couple things can happen. If it's coming down, right, it'll bounce off the first time, do a small bounce, and then if it comes back through, well, you guys, penny stocks, they want to look at. Yeah, penny stocks have been flying. And then if it can't press all the way through, it'll flush right back, right? And it's very similar as it approaches. Sometimes you'll get this situation, right? It'll get a rejection, the first one, just like it bounces off before. And sometimes it'll press right through. Dead serious. And so if that overhead supply we definitely need to take a look at here is very obviously 970 right there. And you're right here, you're sitting at a point of control for another consolidation range right there, which happens to be this lower level support. So this level, 920 had to be on your radar. 2 points kind of confluence. You got 200-day moving average, and you got prior levels. At this point, I think you might be exhausted on the week. Why can't I get to this? There it is. Maybe exhausted this week, but look for the little pullback. And here is your lower level kind of consolidation on that. So this would be similar. Oh, geez, this is way up there. They just been buying it. 840. What do you have on the downside for Tesla?
I'm looking at that right now, and 840.
So 840 comes from this section, right? So this right here, you can do it a bunch of different ways. It's about 820. What's for sure is that you need to take a look at this last low. So from just a market structure, swing high, swing low. So you have a 765 high, you have a 678 low, which is higher than this prior low, right? Now you have this high. Here's your low. If Tesla ever breaks this 770 again, moving forward, you're in a definitive new downtrend. At this point, you can kind of look at this and say, number one, this was a lower high right here for the day. This yellow line is our monthly prior month high. So that's a big fat level. Prior month, because that was Friday. So this, yeah, if it breaks below this 895, man, that Friday press was hardcore. Typically, when a stock moves this much, right? So this is 1, 2, 3, 4.5 days in a row. It's almost like 2 or 3 weeks worth of a move. I would actually say it also goes into a stall, kind of like sideways patterns. 20% in 5 days or less, when it spent, that same percentage-wise, 20% in, it spent the last, 2.5 months in a 20% chop zone. So, I would probably take this kind of level right there, chop in 820 on the low end, up to, you hit 930. I mean, 970, it's maxed out to me. But for the rest of this, if I did the same kind of setup, I don't really see the same step in. To me, it was just this earnings catalyst. So that's going to be the biggest level, 750. And this is going to be one of those fundamental events that create a technical level for a long time moving forward. That's that 750, which is the bottom of that top of that consolidation range right in here. For now, you're maxed out 970 on the upside, and really, if you bounce off 895 to 920, and just know that you're battling this 200-day, that is absolutely what's you're running into right now. Excuse me. Yeah, 950 at most. But for now, I wouldn't. I really wouldn't like take an epic short on this either. It just looks more range bound. Microsoft. Let me see. Ooh, Microsoft, little double toppy. Yeah, this is kind of what what I was looking at for the whole week. I think we're already in it, man. What's on the hot list? Nvidia. Oh, okay, so Nvidia, AMD, we actually do have some situations there. So Intel already reported. AMD, huge bounce off the bottom, right? Coming in earnings, they report tomorrow. That's a big one. That's a definite big one. So here's this whole channel to the downside, right? Just barely broke out of it. I'm not gonna. I am long AMD, but I'm trimming right now. Typically, when these kind of happen, it's like retrace somewhere to the top of this channel, and then I look for the trade. It's either gonna come right back in, or it's gonna bounce off the top. So that's what I'm gonna be looking for. That is right around same kind of level, 91.40. If we want to get super specific. Oh, I already have it. 91.58. Yeah, these kind of, man, all these kind of look just range bound. 92.38. I'm just looking at these big candles here on these big kind of whoosh areas where these are really low volume pockets that the stock has not traded in for a while. Quite frankly, and typically this is the opportunity for AMD to really just fill in that low volume area and build some support. That is what it is. Yeah, it's looking like very snipey this week. Snipey, scalpy, quick profits. 20%ers are wins. You guys want to take a look at some penny? I'm not a good penny stock person. CELH. Yeah. I mean, that's not a penny stock for sure. Oh, this is Celsius. Yeah, I know this one. This is the water company. Man, we got a lot of penny stock. Celsius, this is a good company, but you're like all-time high. Honestly, if I were to look for shorts, it would have actually hit just now. So if I wanted to look, like, where is it going to fail out right at this? What is this? 106. Oh, yeah. Look at that. Yeah. You're a hold. You're a hold for sure. Yeah. Tomorrow. Tomorrow you open clean below 86. Have at it. You guys. No, PAAS. Oh, so all right. I actually know this. So this silver miner, and right into one of mine is GDX. So GDX, I currently have an iron condor on. Same kind of thing. I got stopped out of this trade, I swear, at the absolute worst level. Like, I legit got stopped out at 24.50 on the stupid stock. So I sold the literal bottom. Probably not the best, but I do see, like, this is clear consolidation to me. And this would absolutely go with the silver trade. So this PAAS is a silver miner. It'd be a little squeezy in relations to silver. So GDX looks good right now. One thing I will tell you, I did look at gold this morning, and I'm just going to use GLD, the ETF. This looks good. This was a big bounce off the bottom. I was like, I've been eyeing this thing. I didn't take it at the right spot. I think I took a shot early at 160 and drew down. So this was the level right here, right? And it was exactly 158. So bottom, bottom, bottom. Here, we're back in. We've broken structure. I'd like to ideally grab the next higher low, but I don't want to chase it either. So these are 4 big days in a row, really, boom, boom, boom. So I want to see kind of a flat day or two, and then I'll decide where to go on this. Silver, on the other hand, I'm going to take a look at SLV. I was also looking. Silver, on the other hand, is actually, it's got a higher beta than gold. So it moves from a percentage perspective more than gold. And this thing has just kind of flown right off the bottom. So you're a silver miner. I'm pulling this up because you're actually breaking some pretty key levels on silver. It's like 1860 for sure, which was this. Here's the breakdown here. And this was that prior top of support, 1820, right in here. So from a weekly perspective, it's a weekly chart. It's a big old bounce. Look at that. That's a huge like base that it just came out of. So a big pop. Again, kind of running some overhead supply. So I would be cautious of some like blow off tops, but for a very violent, quick trades, these look primed. Gotta give it to you, no question. 2057 for sure is yesterday's level. So unless you're closing above 2057 on PAS, I can't take it long. It'll just be choppy. So above that, and you have this to deal with. So really, if you see it flying, anything over 2150 is ready to roll. The rest, I don't know. Is that supposed to be Tilray? Cannabis. Yeah. I'm like a big cap options trader. You know, I did see Neo this morning, by the way. I don't know if anybody saw this thing. So this guy had a nice little kind of breakout. Watching here, this is a good trader, right? Pop, I'd like to see a higher low. Get set in somewhere around $20, just over 20, ideally on this guy. So 19, if you can fill in this gap, 1960. I'd be looking for this bounce anywhere between 1990, 1960 to take back up to 23-ish, actually. So I did see that one coming. I had one TTWO that was on my watch. So kind of failed right here, 133. Not ready just yet. Was looking at this 127 level. But earnings coming up. If it doesn't make the move right away, just got to walk away from that one. I know some of the guys been looking at shop. Man, we're just in this consolidation across the board. Shop is at the bottom of their consolidation level. So this guy, I will look at. It's a little much here. If we can get a bounce, ooh. If I can get another inside candle and then get an hourly close above 37.50, I would probably trade that to 40 on shop just to tag the top of this consolidation range. Yeah, I know a couple of guys snagged these puts right around here. Hit the low end. Maybe it was here. Yeah, but 37.42. Close above that, you're to 40 for a quickie. These are like 2-day trades, man. Not anything crazy. Been watching Google. High end of this consolidation, not quite there. And this has a huge consolidation that's happening right now. So trade's coming on this guy for me, no question. One or two situations is going to happen. So it's either it reclaims back in here and continues to chop for the rest of the week, and then, you know, maybe it's a next week trade. That could happen. But we're so close to this, right? If I get a bounce here and a break push through that, I'm actually really looking. Ooh, this is happening right now. It would be somewhere right around now, off the top of that consolidation. We shall see. Not quite yet. Want to see the market kind of press. If not, we'll go with what we got. What else was there? Boeing. Anybody look at that? BA. The thing is flying, man. And I mean flying. It's gross. 170. 200-day in the way. Maybe one more day on Boeing. Take it off 163 if I can see a bounce there. I'd actually be looking 163 for Boeing to hold support. Yeah, I think if you guys don't have anything else. Yeah. Yeah, AHR, no, I couldn't do this. This is just on a daily. You got both that level and the 200-day kind of converging. Cool. LPT, RPA, LTP, LTRPA. Squeezy stocks, man. I got nothing. All right, guys. Cool. Steven, is there anything else?
No, that's it. I'm good.
Let me just check the where is it? Watch list. Oh, Disney. Disney I have on still. Long. So Disney I have earnings run up. This looks like so far just kind of like consolidation near the highs. I'm in this. If you're in a single leg call option here, doesn't look like it's gonna be today. Probably won't know until the very end. Has to break above 106.35 for that to stay profitable. Otherwise, you must be in a debit spread. This morning, man, we had so many things just kind of like flush this morning. Did you see Meta? Like, I had sold some 155 put credit spreads, like $5 wide, and I was looking at some calls this morning. I'm like, wow. I ended up jumping in at 170, but this morning at this bottom, I think I sold that 170 for like a buck. I don't know, $1.70, $1.80. It was $30 this morning, right off this bottom. So once, twice, three times, 155, super strong support for Meta just recently here. And so if we're sitting now, remember, bad earnings, good price action right now. This price action does not look that great. But 160, between 160 and 161, it's a very tight kind of zone. I'd be looking in here, probably grab a fib on this guy. Right there. Yeah, so that'd be your 50%. 158.71 is your 66.5% retrace from this morning's move. You probably just take it from here if you wanted. Yeah. 161. I'd be watching around just below 161. Definitely a watcher. That's this pre-market consolidation. And anything above this guy looks solid. Fair value gap. Cool. I think that's good. Max profit on that guy is 170. Max. And then you're at the top of its range. So here's the bottom of Meta's kind of consolidation, right? See it? Tried to peek out. We can go to 170 and then take profits, no question. Other than that, we start seeing bullish movement on this guy towards the end of the day. That's going to look, geez, this looks at like an interesting level right now, the more that I look at it. Yeah, just got to wait for the setup. Like strat setup. 2-1 something, at least on a longer term, hourly. Something like that. I know Amazon, that thing's flying. Lower high on Amazon. No dice. Ooh. Caution. We just hit a ton of resistance up here on Amazon. Anybody see crypto last night? We had that blow off top. That kind of got it like press, kind of pulled back. They bought it up one more time. And, I'm not really sure where it is right now. Let's see. crypto charts. Yeah. So this is kind of like what I'm thinking for the week. This would be like our Monday. This was Saturday afternoon. Press, like blow off top. Consolidation, couldn't go anywhere. And then boosh. Little bit of a retrace. Boosh. Little consolidation. We'll get the next move. But just like that. It's kind of more or less what I'm thinking. So, all right, boys and girls. It's been real. Thanks for tuning in. We'll see you next week, next Monday. Same time, same place. Adios.